Hedge funds. The word itself brings to mind images of complex algorithms, supercomputers, and secretive strategies managing billions of dollars. They seem to operate on a level that is impossible for the average person to comprehend. But what if that wasn't entirely true? What if the core logic behind some of their most effective portfolio strategies could be deconstructed? What if it could be simplified into a powerful, repeatable formula? I spent the last month analyzing the portfolio compositions of several major funds, and a clear three-part pattern emerged. This is an educational deconstruction of that pattern, not a recommendation to buy any specific asset. This is the three-stock formula that I reverse-engineered from the world of elite finance. The first stock in the formula isn't a stock at all. It is the anchor. This is a low-cost S&P 500 index fund ETF, like the SPY or VOO. Its purpose is brutal and simple: to own the entire U.S. economy. A hedge fund cannot afford to bet against the market's total momentum, so they buy the market. This is their foundation of immense, unshakable stability. The second stock is the accelerator. This is the high-conviction bet on innovation and growth. For many funds, this is a NASDAQ 100 index fund ETF, like QQQ. This vehicle holds the 100 largest, most dominant technology companies on the planet. Its purpose is not stability. Its purpose is aggressive appreciation. It is the engine designed to outperform the broader market. The third stock is the shield. This is the move that separates amateurs from professionals. It is an asset designed to protect the portfolio when chaos erupts in the market. A classic example is a gold ETF, like GLD. When currencies weaken or markets panic, gold often moves in the opposite direction. It is the portfolio's insurance policy. It is the defensive weapon. The anchor for stability, the accelerator for growth, the shield for defense. It is a balanced system of offense and defense, a powerful three-part machine that captures the market's strength, accelerates with its most powerful sector, and defends itself against crisis. This is the logic of smart money. It is not a secret algorithm. It is a blueprint,